Alright, what's up guys? My name is Nestor. Some of y'all know me as XMNSTR. Same thing, it's just money, X money, Nestor. It's abbreviated, just a username I made a long time ago. But anyways, my real name is Nestor, and some of y'all know me. I trade SPY on the daily, every day. And so I'm going over my trading strategy because I know some of y'all, it'd help a lot of y'all benefiting knowing how I trade, because my trading strategy is super simple, and I was coming on here to try to explain how I trade and how everything works. So I'm gonna go off by all these indicators I have. I mostly use three. I use MAs, VWAP, and RSI, and then my main thing I use is support and resistance levels. And so to start it off, I'm gonna go with what are support and resistance levels. A level of resistance is basically where sellers are at. So if you look, let's see, I'm gonna find an example for y'all. Resistance level is where sellers are at. So whenever the buyers are down here, they're buying this trend, they're pushing the price up. Sellers will step in and sell off. So because they don't want price to break this level, they don't want it to get past this zone. So the sellers will start stepping in and send price down. So you can say resistance is a sell wall. Basically, it's a area where selling is happening, pushing price back down. And support is the opposite. Support is where buyers are at. So if you look at a support level, like right here, for example, this is where the buyers step in, and they don't want price to go back down this level, so they push it up. So it's pretty simple. Once you get the hang of it, it's pretty easy to use. I love using support and resistance because it's pretty accurate. If you look at my chart, one thing I want to say is some of these levels I have on my chart are invalidated. I've had these on my chart forever. Like this 595, 590 level I've had for over probably 2 months. But they've been well respected, as you can see. Like for example, and another thing I want to say is support and resistance can be reversed. Like for example, a support level can turn into resistance, and resistance can turn into a support. So for example, we break the support level right here, and it acts as resistance. As you see, we break down the support line, we go up. As we start getting close to the support level, we reject. Again, reject. Again, reject. So it acts as a resistance level. As I said right here, I touch it again. These are key levels, and these are levels you'd like to use if you're getting in a position. Like for example, say you got into some longs right here, you got calls to the upside. Typically you will use support and resistance as levels of where you'd like to exit. So if you're down here, you enter and you're riding this whole trend up, and you see that we start consolidating right here, that's typically where you'd like to sell, so you don't have to hold and then catch this huge red candles on the way down. And these are great. It's a great strategy to find good entry and exit points. Like another good way to find an entry point is, let's find one real quick right here. All right, so say you see we have this huge freaking just climb all the way up on this day, and we're just going straight to the freaking moon. Well, right here we start consolidating around the support, and say you miss your entry, and you're trying to be really disciplined, and you're not trying not to chase the trend, even though you probably could have here and still made money. But say you're prices around here and you don't want to chase. Right here we start consolidating. We have a double top. And another thing I love using is candle. I love using candle patterns. So here we have a double top. A double top is when two candles form. They're basically equal to each other, and they're pretty full. This one's not that full, but you get what I mean. We have a double top right here. So right here is where I'd like to probably enter shorts. I would like to enter puts right here. So this the support level could be a good indication that, oh, we're not breaking past it. We tested 1, 2, 3, 4. We're consolidating around here, and it's not happening. I'd like to enter puts, and then I catch this trend down. So it's a good indication to know when you should buy or when you should sell, and they're really easy to find. Like I'm gonna go on this chart where I don't have anything on it. I had supply and demand on here, but they're super easy to find. All you have to do is go on the higher time frames. I love using the 4 hour and the 1 hour, but if we go on the 4 hour, you want to look for levels of rejection. So let's see, that's for resistance. Like let's see, let's go on here. All right, Where do we reject? We reject once, twice, three. You see this whole area? Let me get a nice little box for y'all. This overall area, you see we have multiple candles reject. So right here would be a nice area where we would like to see nice resistance. If you see that this level specifically is being well respected, that means that, you know, sellers are not letting price go beyond this point. So we can go over here, we can say what, 608, let's go right here. This would be a level of support, and I guarantee you I have it on my other chart. Let's go look. I have a bunch of levels. 608.21. What is this? 608.26. Same thing, you know, same area. It's super easy to find. Obviously, I want to say on the higher time frames, they are much more respected compared to the lower time frames. I mean, we can go on the lower time frames. We can go on the 5-minute chart, and we can chart support and resistance for here. Like, look, we can chart, you know, resistance right here, support right here. But I guarantee you, tomorrow or the next day on Monday, when the market opens, it's not going to respect these levels, because it's just the volume is, you know, greater beyond this price action. Price obviously moves. You look, I could have put resistance right here, or yeah, around here-ish. Yeah, I'd say right here, because these candles don't really count. We never tested that level again. Support, same thing down here. But if you look, if I was to mark these support and resistance levels, what am I going to do here? So it's obviously you'd like to go down and go back and look on the higher time frame, so you can find levels that are constantly being respected, levels that have been on my, you know, have been respected for a long time. Like, as I said, some of these, like, for example, some of these that haven't been respected as much as the 605, 606, 604, all those are, you know, a dollar range within them. So you're like, oh, Nestor, why do you have so many support and resistance lines? I use these because that's whenever price action was at all-time highs, and that's when I want to be more, I want to be more exact during the price action, or like I'm really trying to trade that day and say I'm really looking for areas to find exit and entries and whatnot. So that's what I use, is on smaller time frames. But overall, probably delete these, because I mean, these probably aren't validated anymore, especially since we haven't been in that level in a minute. But just overall, it's super easy to find them. Again, if you guys want to look at for support, we can go back on the 4-hour, and support is the opposite. So for resistance, you want to find levels where we reject, and then support, you want to find levels where we typically tend to bounce off. But another thing is I want to tell y'all is that support and resistance is, you know, their names can be swapped. Like, say a resistance level gets beat, it can turn into support. Support gets beat, it can turn into a resistance. You know what I mean? So, like, say for example, let's look for a primary example. We can go back on my chart, where I think I already showed y'all this, but I don't know. Again, it's my first video, so don't clown, because I'm giving y'all niggas sauce. But for example, we get over this hump, you know, over this resistance line, and we start going back down and acts as support. Go down, acts support. Obviously, this was a very kind of looks like a choppy day, so it wasn't really as respected. But look, here's another great example of support resistance. We start getting close to that support level, we start bouncing, resistance, bounce back off, support, boom, resistance. Like, that was just like an easy day. But another thing I want to say is, don't use support and resistance by itself. You want to use it with other confluences, you know, things that help, you know, benefit each other, that work in conjunction with each other. So same for support, same thing. Go over here. Look, we have price, bounce, bounce, bounce. You know, this area, typically the 602 area. I guarantee if you look at my chart, yeah, 602.66. I have that support line. So like I said, on the higher time frames, they're much more respected, so it's good to look for them. I use the 4-hour chart and the 1-hour chart. If, say, we're having like a really odd day, or we expect a huge move, like the other day we had like, for example, we had this huge sell-off. You see this huge red candle? I would look for a level of support on the higher time frames, so I know they're much more respected. I'd probably go on the 4-hour, on the daily. You know, the higher time frame, the better. That's how much, you know, That's how you know that they work very well. The only problem with the higher time frames is that they typically range like pretty far apart. So instead of being, $2 or $3 apart, they can be like $5 or $6 apart. And sometimes SPY does not range within $6. Some days it has a range where it's only like $4 or even worse $2. That's what we've been having recently. It's been shitty, really very very shitty price action, where we range between $1 to $2, and it's awful. But another thing I want to say is with support and resistance, one thing I love using is my EMAs, moving averages, SMA, EMA, same shit. Let's go over with what I use. I use a 9, 21, 50, and 200. So let's go over the most simplest one is the 50 and the 200. The 50 is this line I'm hovering on right now. It's like the reddish, pinkish color. And the 200 is this bullish candle. And so, bullish line. And one thing I want to say about this is whenever they cross, they always tell you where price is going to go. I want you guys to get this in your head. Get your fucking notes out. If you're watching this damn video, get a notebook out and start writing what I'm saying. You should have been doing this since the beginning, but whenever the 50 goes under the 200, that's a bearish cross. And these are very well respected EMAs. These are, bigger EMAs. So whenever the move's respected on a higher time frame, it means shit's gonna hit the fan. Like for example, right here, we're chopping. Or let's see, let's look for a good example. Let's go back on the 5 minute. I had a good example earlier. Where was it at? I think it was right around. My fucking chart will load. What the fuck is this? Bro, why is my chart not loading? Goddamn. Alright, yeah, here's where I was at. So, when the 50, the pink line goes under the blue line, that means it's a bearish cross. That means price is going to go down. As you already see, we're already in a downtrend. When this cross, it even, it confirms it. So, you could use this like, I don't want to fight against the trend. Because if you fight against the trend, say you're fucking trying to buy puts when everyone else is going calls, you're going to get fucking burnt. You're going to get your money stolen and you're going to want to die. So, trust me, I've been there. Listen to this advice. I'm telling y'all. This is a great, easy way to identify trends. You see this 50 goes under the blue line, the 200, and that means we're bearish. Look at price action. Yeah, you can go, oh, Nestor, right here, it goes back up. Well, look at the rest of the trend, nigga. Boom. It goes down. We start, chopping. If you start seeing the EMA go back up and this start going back down, they're going to cross again. That means we're about to go bullish. But if you see, while they're typically apart, that's when you don't, you mainly want to look for when they're about to cross or when they cross. That's the main time. You don't want to look. You don't want to go, oh, I think we're bullish because you look at this huge gap between here. That doesn't matter because if you look in other time frames, the gap can be small or tight and it can go, opposite direction. Like right here, right before we crossed, we're pretty flat. We cross and look, we go from freaking 592 to 595 overnight. So, like I said, these 50 and the 200 is very, very valuable. I fucking love these EMAs. They're pretty handy. They help me. And another thing I want to say about these is they act as support as well. They act as support and resistance. So if you want to see, the strongest resistance EMA is the 200. This will always, like, support and resistance. It always fucking goes crazy. Like, for example, let's find a nice example. Well, actually, we have to go back because we haven't had the 200 be in play in a minute. All right. So this would have been an easy trade. I'm pretty sure I didn't take this because I was in fucking class. But you want to look at this shit? Or no, I think it was in Mexico. And I didn't have data. But I remember I think somebody on the Discord, the other Discord I'm in, broke it down. And I think he entered or he studied it. But look. Whenever we break the 200 EMA, that means we have broke the support. It can go down. Except, look, the 200 also acts as support. So we break the 200, break support, goes down. It starts bouncing on the 200, on the 50. Again, breaks it, whatever, blah, blah. Okay, so as you see right here, we start trending back up. Look, we hit our head on the 200 EMA and start going back down. I would have entered this play as soon as we broke the 50, because that means we have no fucking support. So if you see right here, we hit our head on the 200, we're not getting over it. We start going down to the 50, and it's squeezing. When these lines are, together, it means shit's about to, go crazy. It's either gonna go up or we're either gonna break out, down. And so right here, once we break this 50 EMA, that's where I would enter, and I would target, probably pretty slow, or just let it ride out. So right here, we broke it, we start going all the way down, we see break past my support, break past this support. It's just like a super easy, waterfall you could follow, because there's no support there. If you see that these support lines is being invalidated, like for example this 586, we're being fucking cooked, I would not, pay attention to this. I probably just, hide it away from my chart since it's being invalidated. And then so that would be an easy, trade to take. The other EMAs I want to talk about is the 9 and the 21. 9 EMA is amazing. I'm gonna have I think I sent you all a video, or if I haven't already, I'm going to, about the 9 EMA being fucking fabulous. The 9 EMA also helps you identify the trend. It lets you know if trends are still going. It's only used on shorter time frames though. The 200 and the 50 are great on higher time frames. They help you identify the more long-term trend, but I wouldn't go too crazy on it as well. But the 9 and 21, those are for short time frames. I probably used it on the 15-minute max. I don't think I've ever used it past. But the 9 EMA is beautiful because I use it on the 5-minute chart. I use this EMA every single day. This is what helps me get my exits and entries. So let's look. If the candle's price action is above the 9 EMA, that means we are in a bullish small trend. If we are under it, it means we're in a bearish trend. So let's look for a nice example. Let's see, right here. All right, so let's see. We open price and we start going up. We bounce off, and all these EMAs act as support. They can act as support and resistance. So right here, we're chopping up. This is right at open. I don't like trading right at open. So if I thought we were still gonna go up, I would like to play the 9 EMA bounce if it holds. So if you see right here, we have this huge ass wick. So I'm like, bro, what the fuck? I'm gonna wait. We get this nice little bounce. We get we see we're trying to go down, but we have a continuation up with these candles, these 3 green candles. I typically like to play the 9 EMA. As soon as we test it and we hold above it, that's when I enter, because it just shows me that the 9 EMA is being respected. That's a good entry point. So right here, I would have entered one of these 2 candles, and if we stay constantly above that 9 EMA, it's just a huge uptrend. And so I also like using it for puts, because once we break below it, that means we're going to go on a bear trend. So we go up, we start touching it, and obviously if price is touching the 9 EMA more and more, it's just like support and resistance. The more and more it touches it, the more and more it weakens it, and it starts respecting it less. So here we're touching it so many times, that means we're clearly fixing, and we're struggling to consolidate around the resistance. This is why I use resistance and support with my EMAs or MAs. I don't know. It's exponential moving averages and simple moving averages, same shit. I'm gonna just say MAs. So we start bouncing off of it. We start consolidating right here. As soon as we start wicking down under the 9 EMA, that's when I'm like, oh, it looks like we're going to go bearish. We're probably going to have a nice little sell-off. So I wait. We start, we're staying above it, but we're struggling. These candles are getting smaller. As soon as we get a candle below it, close below it, like right here we have a nice candle. You could have played this candle. You could have played it up, entered, and then we reject off the 90 MA. You see we're breaking down below it. On this candle, we go up to it, reject it. That would be a nice put entry. This area would have been a nice, very nice put entry. Because as soon as you enter, you see we're under the 200, the 90 MA, and we start going down. And another thing that lets you know the short-term trends is when these cross. When the 9 MA goes under the 21 MA, that means we're in a bearish trend. So you get in this, little play, you get in some puts, you're writing it down. Look right here. What is that? That's the 9 going under the 21. That's a bearish indication. So that means like, oh shoot, I probably want to. You could either add here, or you can just go like, all right, I'm gonna, typically I'm gonna like keep on holding. And where would you want to sell off? Where would you want to sell your puts? Well, like I said, 50 acts as support. So you see, we get this cross, we go down. What happens? We bounce off the 50. That would be a great area to leave, unless you want to, you're ballsy. You want to be like, oh shit, I'm trying to hold. You wait for this candle to break past the 50, and then you can target your support. So this trend would have been super easy to trade, but like I said, the 9MA is amazing. When price is above it, it means we're bullish. When price is below it, we're bearish. Entries you want to look at is you want to look when a candle closes above the 9MA or below. And that you look for a nice little retest. You enter on that retest, and then you start using your other confluences, like your support lines and your 50 or 200 EMA, or your candle patterns, to find your exits. So it's super easy. I love it. It's my favorite MA. I use it on the daily basis. And so another thing I like to use is VWAP. VWAP is, I forgot what it means. It's like volume weighted average price. So this is typically like the average price. This is where price tends to range. So and this also acts as support and resistance. This is a little areas where you can use it to exit or enter, or it tells you where price is going. So for example, we're in a bull trend when price is above the VWAP. There's a VWAP. Like right here, we're above it. You typically want to stay long. If we're below it, you want to go short. And when we're consolidating in the middle, because there's days where price is super choppy and we're just in the middle of all the shit. Let me go further back. I want to see like right here, we consolidate in the middle. You wait for a breakout either up or down. Look, we had a huge breakdown down. Look, we're below the VWAP, we're going down. We're above the VWAP, we're going up. So, it's very nice to use, and it's great to use for entry points and exit points, like I said. Like right here, say we're starting to go down towards that VWAP. I want to get in some shorts. All right, you get in shorts, you got your puts, you ride this out. The middle tends to be a strong support and resistance. Like you see right here, what happens? We get to this area and we bounce right up. I'm pretty sure I had an example earlier, or like more recent. Let me see if I can find it. I don't know if I charted it for y'all or not, but I feel I was fucking spot on. Let's see. What's today's day? Today's the 17th. I think I got this sometime last week. The 14th. Nah. I don't know. Anyways. Okay. Look, right here. What is that? A doji. We have a break of structure as well. So you see, if we go and this is okay, a little liquidity sweep. That's another thing I use. I use liquidity sweep. Boom. We sweep the low. Doji, break a structure, I enter, and my take profit is right at this line. Because you see, we started consolidating a little bit, and then we break above. So that would have been my take profit. That would have been nice, easy. Say I entered right here, 579. I exit where? 581. Or 580-ish. Yeah, same shit. 581.40. That's where the blue line's at. It's very, very simple. I keep everything super simple. I don't use VWAP as much. But, it's nice whenever things are getting choppy, things are getting tricky, and, you need to be more precise. I use the VWAP with my EMAs. Last indicator that I use is RSI, Relative Strength Index. This tells you when a stock is being overbought or oversold. And this also helps you know if you want to go long or short, because typically if like say let's give an example. Say you're trying to buy some fucking shoes at the store and they're going for $200, and it's been at first when they were first being, it's like pandas, bro. Like panda dunks, when they first came out they're 110, but shit, people were hyping them up so much they went up to $200 fucking dollars, and now if you look at on StockX they're probably like 160, 170. So obviously you don't want to buy them at the top. You don't want to buy at the top of the price. You don't want to buy at the highest price. So that you can use the same concept here. Like look, for this example right here, we start being overbought a little. Look what happens. We get a double top. We start selling down. That would be a nice indication. That would be a nice confluence. If you see that price is up, see, like, let's get my EMAs out too. Let's just see how fucking accurate this is. All right, look, we're going on this uptrend. This is where I'd like to exit. Once we reach my support, I would have probably exit already. If I didn't exit on the view up down here, I'd exit around this consolidation. But as soon as I see this fucking double top, I'm out. I hate double tops. They're the worst. They are super, super, useful. But like, damn, bro, like, you don't want to be caught on a double top because that bitch is gonna drop quick. So you get this double top right here. You enter shorts. Look what happens. We test this 90 MA, we break the 90 MA, and what I say, when we go under the 90 MA, we are bearish. So look, also, we're overbought a little. So that means we're gonna go down. Boom! Catch this huge move up. Say you caught at the fucking top, especially like right when the double top was gonna happen. 584, you sell down here, 581 or 582 basically, because it's a couple cents off. That's still a $2 move that you would be able to catch. You don't want to miss those movements. You want to be precise. You want to be on your shit. And look, like I said, the 50 acts as support. You get in some shorts. You're holding through this fucking shit. What's going to happen? You touch the 50 acts as support. You have this double bottom and it sends you up, but this is a fake out. The other thing I want to say is, this is why I say it's very important to use multiple different indications and confluences together. Because look, we get this double top, but we start rejecting this 90 MA. So that means we're going bearish still. If you were solely relying on candles, you would have gone into calls right now and you would have gone fucked. That's why I'm saying you need to use confluences that help each other. So right here, you're like, oh shit, started price sell. We reject off the 90 MA, we go even lower. So, it's just something to keep an eye on. But one thing I want to say is, don't be fucking greedy. If you see that we are overbought and that we go down and we touch the 50, I would exit. Because data is a thing, especially if you're doing 0 date to expires. They're riskier. And just because you have this huge move down, I guarantee you this candle that wicked all the way up to the support probably took like a good third of your freaking profits, because data sucks dick. But like I said, I love using it. It's very nice. It helps you catch indications. Like right here, we were oversold, as you see. Oh shit. You see the little red down there on the very bottom down here? Oh, this shit will go away. It's not gonna go away. But you see how it's a little red? Look, we're oversold. We started going up on an uptrend. We're just kind of choppy, but if you see, we start ranging up slowly. So this could be a nice day to get like a 1 or 2 date to expire call and ride it out. Same thing over here. We are overbought. We're over here breaking support. We go down. Boom. You want to just see what I'm saying? It's just, whenever you're overbought, you don't want to buy calls. Unless you know that some fuck shit's going to happen, some news is going to come out. You don't want to buy calls if you're overbought. You don't want to buy puts if you're oversold. That doesn't make sense. That's like you trying to fucking, like say Panda, say Black Friday's on the next day. And you're trying to get some fucking AirPods. And the day before their Black Friday, they're like 190. And on Black Friday, they're $100. Why would you buy it before Black Friday when you could get it for a better price? You know what I'm saying? You don't want to just jump the gun. You don't want to get caught. You want to be safe. You want to be, on your shit. And so last thing that I use is liquidity and break a structure. This is an indication. This is a strategy. So I'm going to go ahead and put the shit away. I'm going to go on my other chart that doesn't have shit. I love using liquidity. It fucking makes me horny. Like, just straight up. Because it's super, super easy to catch. And so liquidity is just an area where there's buyers and sellers. Same thing with support and resistance. So, and typically it's mostly when there's a huge move. So say there's a huge move down, it's a liquidity grab. It grabs, it just pushes price down. So people, the buyers can step in and go like, oh shit, this is our. It's typically banks. Banks are the ones that control it. They're like, okay, we're gonna push price down, and then we're gonna buy hella shares, so we can make money. We can fuck everybody over. That's the whole point of a liquidity sweep. Like for example, right here, we have this previous little liquidity right here, and like I said, we're chopping down. The bank's like, okay, we gotta push this shit up so we can sell some shares. They push it up. We get the sweep. Boom, they sell a bunch of shares, so they get they get a better price. Instead of selling it down here when it was at 576, they sell it up here when it was at 584. That shit matters to banks. Their whole point of banks and institutions is to make money, and so they use us as another way to help push liquidity up. Because obviously, if you see that we're in an uptrend, right? Oh shit, we're gonna buy calls, and so liquidity is nice because you don't want to be caught in liquidity. You don't want to be in these calls and you're like, okay, we're going to get over this. We're going to break the previous high and keep going higher. No, because in the banks, you're going to go like, all right, these niggas over here, we're going to fucking sell the fuck out of it. So, boom, they sell off. This is a liquidity sweep. Let me just mark it out for you. And we can go down on the lower time frame. So, you guys can see exactly what I mean. So, let's go right here. Boom. Liquidity sweep. I'll even write it out for y'all. Sweep. Let's go on the 5-minute chart. Let's see, where was that liquidity sweep? Right here, right? And what do we get? What do we get? A break of structure. What is a break of structure? It's when price is thrown out of balance. It's like when there's just an obvious pattern that means it's like, okay, we're gonna go in the opposite direction. So that a great example of that would be either of these two. We have this candle up, this huge candle, break a structure. But what I would probably like to use most for an entry would probably be this one right here. I forgot what that candle's called. I don't think that's a fucking doji, but no, it's not a doji. I don't know. But anyways, you see, we're going up, we get this break a structure, and then we go down. I can probably find a better example. Let me look. Let me go further back. Let's see. What is this? This is December. I'm pretty sure I had a badass liquidity sweep. Let's see. I mostly use them whenever we're like in a downtrend because it just, I don't know why, it just works best for me. All right, let's go over here. And you can find liquidity sweeps on higher time frames, but I like using the 15-minute because I day trade 0 date to expire options. Right here. No, that wouldn't be considered. This could be considered a liquidity sweep maybe because as soon as we, bounce down, we go up. I want to find an obvious one though. Right here. So, we're balling. We get a liquidity sweep. Let me write it. Sweep. What day is this? November 11th-ish. Let me go on the 5-minute. Damn. It's gonna be far. Fuck, I moved my damn line. Motherfucker. Alright, well clearly we are way off. Damn, dude. What was it? November 11th? Okay. Let's see. Okay, so it was probably over here. Let this chart load. Yeah. Right here. We get this sweep. I think it was a little higher. Yeah. Sweep. So we're chilling. Banks are like, all right, let's make some fucking money. Sweep. What happens? Let's go over here. We have, look, what is that? A doji candle. A doji. A bullish doji because it's green as well. So let me, make this obvious for y'all. Arrow marker. Boom. Let me write it out too. Bullish doji. Man, fuck Doji. And so we get that liquidity sweep. We get the bullish doji, which means we are probably going to go in a bullish trend. And then a break of structure would be right here. We obviously break the downtrend. We start going up. This candle, I'd probably enter in one of these two candles. And then we ride the wave. We ride the wave up, baby. So right here, say I got in the middle of the candle, 595.49, and I ride it all the way up to 598. What a move! This is why I love liquidity, because it typically when you sweep liquidity, it moves price drastically. It just takes out buyers or sellers, and then just reverses like crazy and goes in the other end. So that's why, like, especially if you see a major sell-off going, 9 times out of 10, it's gonna be a liquidity grab. So, hold your horses. Don't get FOMO. Don't go like, oh shit, the market's going down, it's dumping. So I need to dump too. I need to buy puts. No, because by the time you're buy puts, it's already been the bottom of the trend, and you get fucking your ass in out, and you get cooked. Trust me, it's happened to me multiple times. It's happened to some of y'all. I think in one of the discords I'm in, we got fucking cooked because we were chasing. When we look back at the chart, it was super easy. But that's basically all I gotta say. That's all I use. Liquidity sweeps, support and resistance, 9, 21, 50, and 200 EMAs, VWAP, RSI. I'm probably all over this place. I might make another video, but this is just me explaining it right now. It's my first video too, so don't hate, because I don't even have to be doing this shit. I make my own money, but I'm over here trying to make y'all money. So just do more research. I think I sent y'all a video, the 9 EMA. I'll probably send y'all some more videos. I'm not the best teacher. Again, I'm just a fucking kid in school who so happens to be decent at trading. Again, I'm not perfect. I still take losses. But at the end of the day, I think I've won more than I've lost. So, yeah. Just, another thing I want to say is just know how to manage your risk and set stop loss. Because I'm going to be honest, whenever I was first trading, I didn't have a fucking stop loss. And I blew hundreds and thousands of fucking dollars because I was just arrogant and stupid. I was like, oh, it's down 80%. What if I get a badass reversal? And my dumbass, I might as well just go to the damn casino and start fucking hitting some damn slots, because that's what I was doing with my money. I was just throwing it in there and praying. I was fucking getting on my hands and knees and just fucking praying that some fucking bank would hear my cry and God would send him a signal and go like, hey, stop that shit. Nestor needs to make money. So, it doesn't make sense. Set stop loss. Know how much money you're willing to lose. That's another thing. Risk management. If you only are able to lose $100 per day or a week or whatever, set tight stop losses. And don't feel the need to trade every day. I know this previous week I'm making this video, there's been some really, really shitty days. I think yesterday I only took one trade. It was just super bad price action. Sometimes it's better to sit on your hands and sit on your money instead of giving it away, because that money you could use for a better day, a better price action, a better trends, and just, overall, I just want to say just keep studying. I know some of you are fucking lazy and don't want to study, but trust me, it's going to pay out in the long run. This is the hardest way to make easy money, but once you understand it, it's super easy. If you devote all your fucking time and motivation, you can do it. I mean, shit, if I was able to make 10 grand in like the first month or 2 months that I was trading, why can't you? Just be super disciplined and be confident. Don't be scared and don't be like, oh, because then you're going to go like, oh, this is happening, this trend is happening, but I'm scared it's not going to work. And then it's happening in your favor, and then you join late, and then you still get cooked, or you don't make as much money as you're able to. Just remember to always be confident. Always know what you're doing. Don't ever go into a trade going, oh, I hope this is gonna happen, because 9 times out of 10, it's fucking not. So just grow up, and just do this way better. Because trust, trust, we will fucking print money like crazy once we all master this down. Like I said, the people I'm gonna show this to, you guys are people that like, you guys are just regular traders like me. I'm not over here fucking. If I was a better trader than you, I'd fucking make you pay for this shit. But I'm not. So you guys are lucky right now that I'm a shitty trader. Well, not shitty, but I'm average trader. Because if I was balling, best believe I'd be fucking charging niggas to join my Discord. And yes, I have my own Discord. But do I plan on charging niggas in the future? Yes. But right now I'm not. Because I need to build credibility. Need to build my account. But I'll probably let like 10, 15 niggas in there for free. And once we start, rolling, once we start getting into action, best believe I'm going to charge niggas for my damn Discord. So just be grateful. If you guys have any questions, let me know. Any tips to make the video better, let me know. I plan on making more videos. Because, like I said, I just gave you my whole strategy. Right now, I'd like to break it apart, like have a video specifically on support and resistance, a video on specifically EMAs, blah blah. It just to help it break it up and to help simplify it, because I feel like right now I'm very vague. But that was just the simplest way I could put this video, and I've been meaning to make this video for a while. But just don't get greedy, take profit, set your stop loss, don't overtrade, and just use all of these things that I told y'all in my strategy. If you want to follow my strategy, use them as confluences with other indications. Like use it with RSI, use supply and demand with your EMAs, use it with VWAP. It's just going to help you be a lot more accurate, and it's going to help you prevent from giving money away. But that's all I got to say. Thanks for listening. Later.